where do you think we are with Bitcoin, with adoption, and kind of from a market structure standpoint?
So Bitcoin from a market structure has been incredibly bullish. The pattern now, the chart pattern looks very similar to a smaller version of the one from March to June 2020, where it exploded. We've had this lovely corrective phase. We see all the on-chain stuff, William Clemente and Willy Woo and all those guys showing that it's all going into good, strong hands. We had the China FUD. We've had a bunch of FUD. This usually, and there's no guarantees, usually October, November, December is ridiculously good, particularly at this point in the halving cycle. So structurally, it looks amazing. So, okay, who are the buyers here? So most people who got into crypto came in via Bitcoin. That's always the case. It's the big daddy asset. And then people move out the risk curve, and that's pretty normal. So who's the next big buyer of Bitcoin? It's pretty clear to me who they are. It is the ongoing institutions. I mean, that just keeps going. And I think we'll see an acceleration in that, particularly if the price breaks out, because everybody's like sheep. They always want to follow each other. Secondly, it is the coming ETF. It's definitely going to, well, definitely, I don't know that, but I just have a very strong feeling it comes in the next, over this October, November, December period. And that will drive a huge amount of money in the space because it allows RIAs to allocate and ordinary individuals in a way that they can easily understand. And finally, I think we're starting to see noise from the sovereign wealth funds. So I know some of them, and I've talked about this before with you, is some of them are already allocated, but I think we're going to start to see more sovereign wealth activity in the space.
Ethereum and the Ether asset?
So Ethereum, again, the charts look absolutely astonishing. The on-chain activity, the adoption is by far the largest of anything in the space. So it's huge what's going on. The move towards ETH 2.0 means that, at a simple level, everybody's going to stake everything they've got to get it there. And so that takes all the coins off the market. There's about 11% of all ETH in circulation. So it's almost unbuyable. So you bring a whale into the market, the price just explodes. So I've never really seen a setup as good as this in that respect. So I think it's a very high quality bet for the time being because of all of this stuff that's either off exchange, being staked, and there's no free supply, and demand keeps going exponential. So like ETH overall, what's interesting is we're starting to see institutional adoption. So I spoke at Cowen's big event, and it wasn't about Bitcoin. It was solely about Ethereum, which took me by surprise. That's the first one I've done. It's kind of been referenced in other ones, but here I am now speaking to investment banks when they're asking me to come and talk about Ethereum and just skipping Bitcoin, saying, well, we assume you know Bitcoin, but here's another opportunity. So I think there's a lot more adoption to come in that space, and I think there's going to be an ETF there too. And again, with this really restricted supply that's going on because of ETH 2.0, I think it drives prices a lot.
When you think about the institutions that are thinking about or talking about Ethereum and Ether, is it because they've already allocated to Bitcoin, or do you see some of them coming in and they're basically actually skipping over Bitcoin?
I think there are some that are skipping over Bitcoin because they get their head around it in a different way, because they think of it as a way of playing the entire technology of the space. So then they don't, it's hard for many of these institutions to stomach the narrative, the Bitcoin narrative of a store of value that central banks are destroying the world and a lot of this stuff, because that kind of goes against a bit of their business model. But Ethereum is not as, it doesn't feel like it's attacking them as much, because it's like, here's a space and we're building decentralized finance on it, and everybody can participate. It doesn't feel that they have to change their internal narratives. So some are finding it just a bit easier to get their heads around what it is without kind of going against or kind of exposing the Wizard of Oz, which is the central banks and what they're doing to currencies overall.
We need a Bitcoin price prediction by end of year, and I need an Ethereum price prediction by end of year. What do you got for us?
I was doing some work on this on the weekend for Global Macro Investor. I'm kind of thinking, I'm kind of a little bit overly bullish right now. And I think the cycle, well, no, because that's not fair, because I was looking at the cycle itself. I think Bitcoin somewhere north of 200 and ETH closer to 15K. But I think we finished the cycle with Bitcoin closer to 400 and ETH closer to 40,000.
All right. So you think by end of year, we've got Bitcoin 200K or so. We've got ETH at 15K. You think end of cycle, which in your opinion, it sounds like kind of February, March of next year.
Something like that, yeah.
Bitcoin's 400,000 and ETH is 40,000.
Yeah.
There's a lot of people watching who hope you're right.
I bloody hope so too. It's not like I haven't backed my own bet. So my money's where my mouth is. Now, we don't know how the cycle's going to play out now. What's going to happen in the, in the bear market? When does that come? Does it come in the same structure? I do think it probably decouples to a certain extent because I think the adoption is going to be really quite big. So that lowers, as a network gets more adopted, the volatility lowers. So I think we're going to see that this time around, and it will decouple. I also think the cycle goes on longer just because of two key factors. One is ETH 2.0 will probably be, I think, the end of the cycle, because everybody will, once it unlocks, people will sell some of their ETH that they put in for the staking. I think that's a pretty common thing to do. That happens probably around tax season as well, so people realize gains. And then in addition, I think the ETF will have come out at that point, and a lot of the pent-up demand will be in. And then we'll have to deal with a bunch of people who don't yet realize how to deal with the 70, 80 vol asset. And you've spent a long time doing this. We all have, is to teach people how to hold, how in a network adoption effect model, you will get volatility, but is more than compensated by price if your time horizon is long enough. And we're going to have to teach all of these RIAs this, because they're all going to panic out. So, there's a lot of work for us all to do to get people to understand how to deal with high vol assets and what it means as well. What it could mean if they do hold on.
I've got two of my brothers here with me, and they got a couple of questions as well. What do you guys got?
Hey, Raoul, thanks for doing this. I appreciate you coming on. So my question would be just kind of around the total market cap of all crypto assets and cryptocurrencies. So we're at around 2 trillion today. If we were to kind of fast forward 5, 10, 15 years from now, where do you think this number can go, and kind of how do you get there?
So I think it goes very interesting. I've just got a chart of adoption of the internet, and crypto maps it beautifully, except the internet was growing at 63% a year when it had 150 million users, which crypto has now. So it was growing at 63% a year. Crypto is growing at 113%. So this is double the adoption rate of the fastest adoption of technology in all recorded history. So we've never seen anything like this. Extrapolate the maths, you get out to 1 billion people by 2024. So this is going to happen really, really fast. By the end of the decade, you're probably at 3.5, 4 billion people, so most of the world. So what does that mean for asset prices? Well, almost all the major asset classes, whether it's equities, bonds, real estate, they're all kind of in the 150 to $300 trillion range. Now, we kind of know that most of those assets are going to go on the blockchain anyway, but let's ignore that. To put this where I think it's going, it's currently 2 trillion. I think a roughly fair value to fit in with the other asset classes is 200 trillion. So it's 100x. We've never had an asset do 100x of that kind of magnitude in all recorded history. I mean, we've never seen it before. None of us have lived through this. So this is, I think, going to be the largest generation of wealth that the world has seen in the shortest period of time.
When you think about the metaverse, you started to kind of go down that path a little bit. I know that you're really excited about this. Where do you think, one, that kind of starts to really permeate society? And then also, two, how do you think about it from an investor seat in terms of how to get exposure to it for your own portfolio?
I think if it's the ongoing process, the fact that you and I, we're now living digitally, and me seeing you, I mean, I have drinks with friends on Zoom. It's normal now. It doesn't bother me, right? So we've now moved a massive step into the digital world where just meeting our friends or meeting people we know can happen over video link, and we don't really care, much like that happened with mobile phones and phones before that, and television and all of these things. So this is an ongoing move into the digital world. And then it accelerates because you start to see the rise of cryptocurrency, and that enables these ecosystems to develop into these rich worlds where you can create value, exchange value, own things. So this creates the other layer. Then the layers on top of that come 5G, distributed computing power, and a bunch of other things that are going to scale that faster. So once you've got the computing power, because right now most of our computers are not gaming computers, so we can't render in the speed we need to render. So we get left with crypto voxels and Decentraland being clunky, and all of the cool kids are on Epic Games and they've got 4K, but we don't have the computing power to do it. All of that is going to change. So all this is the metaverse. It gets thought of in so many ways. For me, it's like our digital fluidity, where we can live and move around in this digital space, interact with our physical space, whether it's through augmented reality, virtual reality, just normal kind of digital world, and we can kind of create lives within it. So we're creating income streams. We're seeing that with Axie Infinity right now. Or we can be educated in the metaverse that kind of levels the playing field. I mean, you can be a kid in Ethiopia and you can therefore now get educated on the same playing field as somebody in the United States, because we have access, and you can be in the same classroom and you get to talk to them. So just things everywhere are going to change because of this. And you know it's going to happen because everybody from Microsoft to Facebook to Apple have basically said this is the bet. It's augmented reality, virtual reality, the metaverse. You know, I spoke to the head of metaverse who knew there was one at AWS. And they're building out the computing power and the cloud storage abilities for all of these massive compute needs, right? So it's happening. Now, the battle is going to be, as ever, the same battle, decentralized versus centralized. And as ever, it'll be a mixture of both, and we get to choose. But that's all coming. And that's a hugely exciting thing. And people haven't really figured this out yet. But again, it's going to be an enormous generator of wealth as the world moves into the digital world.